You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. At Fidelity, you'll always get a great value for your options trades. And with powerful investing tools that provide clear next steps, plus independent research and a wide range of investment types, we can help you make better trading decisions. Learn more about options trading with Fidelity at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Good morning. Today is Friday, November 2nd, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Friday. First thing to know is job creation and wage inflation are in the spotlight. All eyes will focus on the monthly U.S. employment report that the Labor Department will release at 8:30 a.m. Eastern Time on Friday. The consensus forecast is that the data will show jobs growth of 193,000 after adding 134,000 positions in September, while the unemployment rate is seen as inching up to 3.8 from 3.7. However, most of the attention will likely be on average hourly earnings figures, which are expected to rise 3.1% from a year earlier, quicker than the 2.8% increase a month earlier. Data released last week showed the U.S. economy grew at a 3.5% annualized rate, keeping growth on track to hit the Trump administration's 3% target this year. The Federal Reserve remains on course to raise interest rates again in December, despite a recent tightening in financial market conditions brought about by a stock market sell-off and a rise in U.S. Treasury yields. The second thing to know today is Apple sinks 5% after disappointing guidance. Shares in Apple fell 5% in pre-market trade on Friday after the company's fiscal first quarter guidance missed expectations. The company said it expects revenue of $89 billion to $93 billion in fiscal first quarter, with the midpoint lower than current consensus estimates for $92.9 billion. Gross margins came in at 38.2%, just below forecasts of 38.3%. Looking ahead, Apple saw gross margins in a range of 38% to 38.5%, shy of the street's expectations of 38.6%. The third thing to note today is Trump is optimistic over trade with China. U.S. President Donald Trump said on Thursday that he had a long and very good conversation with Chinese President Xi Jinping with a heavy emphasis on trade. Those discussions are moving along nicely, with meetings being scheduled at the G20 in Argentina, he said. Bloomberg, citing people familiar with the matter, reported that Trump wants to get a deal done at that meeting and has already asked officials to start drafting possible terms. U.S. stocks set to open. Fourth thing to know is U.S. stocks are set to open higher as the buying wave spreads. Trump's optimistic tone on U.S.-China trade sparked a relief rally that pushed the Dow up triple digits on Thursday, and buying enthusiasm quickly spread to Asia, where stocks jumped to 3-week highs. China's Shanghai Composite closed up 2.7%, with Japan's Nikkei 225 close behind with gains of 2.6%. European stocks followed suit, with benchmark Euro Stoxx 50 rising more than 1%. The fifth thing to note today is oil prices are mixed after a report of Iran sanction waivers and data on U.S. drilling activity is on tap. Oil prices saw mixed trade on Friday as traders weighed optimism that the U.S. and China could resolve their trade differences against a report that Washington had granted several countries waivers on Iran's sanctions. U.S. crude futures lost 5 cents or 0.08% to 63.64 by 5:46 a.m. Eastern, while Brent oil traded up 17 cents or 0.23% to $73.06. Both barrels have dropped nearly 6% this week as worries of oversupply hit prices. Saudi Arabia pledged earlier in the month to raise oil output to offset the fall from Iranian exports expected to be caused by the U.S. sanctions that go into effect on November 4th, while Russia also said on Saturday that there's no reason for the country to cut its production levels. Our second story today is from MarketWatch.com, and it's about Apple. Apple predicts record holiday sales, but that isn't enough to save the stock. Apple revealed a blockbuster September quarter Thursday and predicted record revenue for the holiday season. That wasn't good enough for investors, though. The smartphone manufacturer on Thursday reported that it had grown revenue by 20% in its fiscal fourth quarter, thanks in part to strong momentum for the latest iPhones. The iPhone business grew by the largest percentage in years, rising 29% as the iPhone XS and XS Max hit shelves. Those numbers were somewhat of an anomaly, to be sure. Part of Apple's September quarter this year featured 2 expensive new phones, whereas the company hadn't yet rolled out the pricey iPhone X as of the end of its year earlier quarter. That creates a rather easy comparison, but also helped lead to relatively cautious growth projections, for at least for the quarter, that helped send shares down 6.5% in after-hours trading. Our third story today is from investing.com. As China's soy demand wavers, U.S. farmers turn back to grains. Since the mid-2000s, North Dakota farmer Paul Thomas has planted more of his land with soybeans as China's demand for the oilseed grew. The shift culminated this year when Thomas planted 1,600 of his 5,000 acres with soybeans, the most ever. But Thomas and many farmers like him plan to return to the old U.S. Farm Belt staples in 2019, corn and wheat. The change will reverse a trend that saw U.S. farmers plant more acreage this year with soybeans than corn for the first time in 35 years. The expected shift to other grains comes as farmers struggle to sell the soybean crop because of President Donald Trump's trade war with China. China typically buys 60% of U.S. soybean exports, but has bought almost none for months due to the trade war, pushing prices to a decade low. Thomas plans to plant more wheat next year, hoping he can earn more by decreasing his reliance on the crop dependent on Chinese demand. Soybean prices are kicking our butts, said Thomas. And that, ladies and gentlemen, is news you can use for today, Friday, November 2nd, 2018, your Options News Rundown. I'm Dan Passarelli, trade smart, and have a nice weekend.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.